This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
TradeFlow Capital Management celebrates 5 years of strong returns and SME success. To find out more, please visit www.tradeflow.capital.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
The Group of Seven, G7, coalition will keep a $60 per barrel price cap on seaborne Russian oil, a coalition official said, despite rising global crude prices and calls by some countries for a lower price cap to restrict Moscow's revenues. The G7 and Australia made the decision to maintain the cap over the past few weeks after a review of the $60 price, set in December with an aim to reduce Moscow's ability to finance its war in Ukraine, the official said on condition of anonymity. It comes after 4 weeks of gains in benchmark oil prices helped by an output cut announced by OPEC+, which groups the Organization of the Petroleum Exporting Countries and Allies led by Russia, as well as a recovery in Chinese consumption.
Russia's Urals oil keep flowing to Asia in April, while softer freight rates helped the grade's sellers to reach faraway customers, two traders said, and Refinitiv data showed on Monday. Urals oil cargoes loading in the first half of April are moving to India's and China's ports, according to Refinitiv Acon data. India accounts for more than 70% of the seaborne supplies of the grade this month, and China accounts for about 20% so far, Reuters calculations showed. Softer freight rates supported steady flow of the Russian oil to Asia, traders said.
Moving on to the top news in the energy sector.
U.S. crude oil and natural gas production in the 7 biggest shale basins is expected to rise in May to the highest on record, data from the Energy Information Administration showed on Monday. Oil output is set to rise 49,000 barrels per day to 9.33 million barrels of oil per day, the AIS said. Output in the Permian Basin in Texas and New Mexico, the biggest U.S. shale oil basin, is expected to rise to 5.69 million barrels of oil per day. While that would be a record high, crude oil output from the region is expected to gain by about 13,900 barrels of oil per day from the previous month, the smallest increase since December, the data showed.
Oil prices firmed slightly on Tuesday, after falling 2% in the previous session, as stronger economic data from the world's largest crude importer China underpinned the demand outlook. Brent crude climbed 34 cents to $85.10 a barrel at 0618 GMT, while U.S. West Texas Intermediate rose 29 cents to $81.12 a barrel. China's economy grew at a faster than expected clip in the first quarter, official data showed, expanding 4.5% year-on-year as policymakers moved to bolster growth following the end of strict COVID-19 curbs in December. Next, we have the top news in metal markets. A surge in Chinese steel exports in the first quarter of this year is set to fade in coming months, traders and analysts said, compounding the impact of weaker than expected demand for steel at home. China, the world's top steel producer, shipped 20.08 million tons of steel products overseas in the first quarter, up by more than half compared with the year-earlier quarter and the highest for the period in 6 years, data showed last week. The large outflows of hot-rolled coil, HRC, medium plate and coated steel boosted profits for mills that have struggled to make money at home amid a tepid recovery in the Chinese economy.
Gold prices rose on Tuesday after 2 sessions of losses as the dollar eased, while investors sought more clarity on the U.S. Federal Reserve's monetary policy stance. Spot gold was up 0.3% at $2,000.09 per ounce, as of 0642 GMT. U.S. gold futures rose 0.2% to $2,010.20. Given the sharp moves of late and little Tier 1 economic data to guide this week, we should expect gold to consolidate in the $1,980 to $2,020 range, said OCBC FX strategist Christopher Wong. The US dollar index was 0.2% lower and made bullion cheaper for overseas buyers.
We will now look at the top news in the agricultural sector.
Indian mills produced 31.1 million tons of sugar since the current season began on October 1st, a fall of 5.4% year-on-year, as many mills closed early due to limited availability of sugarcane, a leading trade body said on Tuesday. Lower sugar output from India, the world's biggest producer of the sweetener, will leave hardly any surplus for additional exports during the current 2022-23 season. Out of 532 mills that started operations in the current season, 400 mills closed operations, including all mills from the top producing western state of Maharashtra, the Indian Sugar Mills Association said in a statement. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.